The Jupiter exchange on Solana. This protocol has been killing it the last few months. Ignore this coin at your peril. People are talking about it. The coin is pumping. The network activity is exploding. What the heck's going on, man? Well, in today's video, I am going to tell you all that you need to know about Jupiter, what it is, what you can do with it, its native token and related risks and opportunities at the end of the video. So make sure to stick around for that important analysis. And the best part is we're going to be explaining it all so simply that even your grandmammy is going to get it. Okay. So before we dive in, just a quick note here for you. No one has paid us to make this video. This information is being provided to you for free for educational purposes. This is not a recommendation to go out and either buy, sell, or hold the Jupiter coin. Furthermore, I do hold JUP. For full portfolio disclosures, please see the link in the description or the pinned comment over on X. Okay, let's get it. So, launched all the way back in 2021 by, at the time, pseudonymous developer Where Meow. Jupiter is a decentralized exchange that operates on the Solana network. A decentralized exchange, or a DEX, DEX for short, provides a marketplace where users can go and trade crypto with each other directly without having to go through any kind of third-party centralized intermediary like Coinbase, for example. Jupiter's bread and butter product is its swap exchange. Swap allows users to easily trade between different cryptocurrencies and different stable coins with just a few clicks of the button. Now, what makes swap interesting is that behind the hood, Jupiter works as a liquidity aggregator. This means that Jupiter connects to multiple other decentralized exchanges on Solana like Serum, Radium, Saber, and others, and is thus able to access the crypto on those exchanges for the trades that you do on swap. More available crypto or more liquidity means, of course, that you can then get the best possible prices when aping into all your favorite meme coins and the lowest trade slippage possible. Now, Jupiter has multiple other features besides swap, so let's take a look at those. And of course, keep in mind here that Jupiter's liquidity aggregator works behind the scenes with most of these other trading products as well, in order, of course, to increase liquidity. Jupiter's limit order feature allows you to set the price at which you want to buy or sell a particular token. And then, of course, your order is automatically filled when the market price actually hits that you set. Assuming, of course, that market actually does go down there, so you do hit it. And with the DCA feature, or dollar cost average feature, very nice feature, by the way, you can automate crypto purchases or crypto sells over regular intervals for a specified period of time. For example, sell $100 worth of some token every 5 hours. The interval periods and the overall DCA period are pretty customizable, so it allows for a lot of options. Then there's the Jupiter Bridge, which allows you to move crypto from multiple other blockchains onto Solana in just a few clicks, which is pretty damn nice. You can also swap assets across the bridge. For example, imagine you have some ETH sitting on Ethereum, but you want Sol on Solana. Well, you can actually swap your ETH for Sol across the bridge and onto Solana, which is pretty damn cool. Next, there is Jupiter's Perpetual Swaps Exchange, futures trading exchange. Here you can trade those perpetual future contracts on Solana, Ethereum, and Bitcoin. This exchange allows you to either long or short these assets with up to 100x leverage. Be careful out there. You don't need 100x, guys, but it's out there for the degens who want it. And finally, there's the JLP pool, or the Jupiter Liquidity Provider Pool. Here, you can act as a liquidity provider for Jupiter's perpetual exchange. This means that you back the exchange with capital in the form of JLP tokens. In order to facilitate trading, 70% of the generated trading fees are distributed back into the liquidity providers, and the pool is currently paying a whopping 138% APY, and that's real yield, by the way, from fees generated on the platform. Their newest product is the LFG Launchpad, which will act as a way to introduce new tokens into the market. In fact, the JUP token was the first token used for the LFG Launchpad, with many more token launches already in the pipeline. Token launch pads, of course, in bull markets tend to have very strong narrative potential and strong performance, assuming, of course, they bring good launches to their launch pads. Also, the developer behind everything, WhereMao, has stated that the revenue sharing for token holders could be on the table in the future, but that remains to be seen when or how much or if it actually happens, but it's been talked about. Okay, before we continue, let me interrupt the flow just real quick, like to let you know about the best damn newsletter in the cryptocurrency industry. It's my newsletter. Surprise. It's called Wealth Mastery. Every week, we are bringing you the latest, the hottest, the best money making insights on airdrops, altcoin news, deep dives, NFTs, technical analysis, and much, much more. You can join our 110,000 plus weekly readers and sign up for free using the link down below in the description or in the pinned comment on X. Now let's discuss JUP, Jupiter's native token. JUP, JUP is the protocol's governance token. So it's used for voting power with regards to different protocol initiatives, different upgrades, as well as roadmap direction. Now, normally, I crap all over governance tokens because governance tokens are super, super lame. But JUP has an active incentive program with 100 million JUP going to stakers that are actively participating in governance. And the stakers also get 75% of Jupiter's LFG launchpad fees. So staking and doing governance could actually be lucrative in this example, unlike basically every other governance token out there. So there's a difference here. There's a max supply of 10 billion JUP. 50% of this 10 billion will be managed by the team. The other 50% will be distributed out to the community over time. Out of the 50% managed by the team, 20% is reserved for current team members. These tokens are currently locked away, but they will start to be released to the team over a 2-year period between January 2025 until 2027. Now, it's unclear when and how all of the 20% strategic reserve for Jupiter will be released, but that's out there as well. And the 10% liquidity provision for the protocol will also be released throughout 2024. Now, out of the 50% of tokens reserved for the community, 40% are reserved for 4 annual airdrops. The first airdrop of 1 billion tokens has already happened. It happened on January 31st of this year. I know a lot of you guys got that airdrop. So the next airdrop should occur then in January of 2025. Out of the 10% reserved for contributors and grants, half of that money is going to be released throughout 2024 to get people to come and, do stuff in the Solana ecosystem or launch on their launchpad, stuff like this. It's unclear when the other half will end up being released. Now, JUP's current circulating supply is 1.35 billion JUP. 1 billion comes from the community side from the airdrop on January 31st, and the other 350 million was from the team side, which is being used currently for the protocol operations. As mentioned earlier, another 1.15 billion tokens were released over the course of this year for different community needs and other protocol operations. Now, to put it another way, by the end of 2024, 25% or 2.5 billion JUP tokens will have been unlocked and released out into the wild, into the ecosystem, into the market. So what about Jupiter's key statistics and big partnerships? Well, the first thing to note is the explosion in trading volumes over on Jupiter since December of 2023. Solana season is here, baby, and Jupiter is benefiting from it. The protocol's trade volumes from March are 37x compared to October of last year. It's thought that a lot of these volume increases can be attributed largely to the Solana meme coin mania that's been happening over the past few months. It's definitely going to be a big part of it. Coins like Slurf and Bohm and Nap and Whiff, they've been booming, man. It's been crazy. And a lot of that trading, it's happening on Jupiter. It's happening on chain. A second statistic to note here is that Jupiter is now the second largest app on Solana by spent gas fees. A total of $3.8 million in fees have been spent using Jupiter. That is 5x more than Solana's third largest application, Orca. And the third to note is that Jupiter has been doing so much volume that there have even been some days already where it's even beating out the long reigning volume champion, the King Daddy, the big boy, Uniswap. Although most days Jupiter is still in the number 2 spot. Still, though, impressive considering just how fast all this has happened for Jupiter, volume wise anyway. And Jupiter, of course, has a ton of partnerships. The vast majority of them are just, various types of decentralized applications, as you'd expect from a big decentralized exchange, and different wallets and stuff within the Solana ecosystem. Some notable names from all that include collaborations with Mercurio, which is a fiat to crypto on-ramp provider, Star Atlas, a Solana-based metaverse game where users can trade tokens with Jupiter through the Star Atlas marketplace. So it's sort of a background integration. We have the BitGet wallet where users can connect to Jupiter via their Apple and their Android phones, so making trading wildly easy. Ape into shit coins at the touch of a button. Now, what about the risks? What about the opportunities? So let's start with the risks. The JUP token does face big inflation this year and certainly over the next few years. So unless you are actively farming the airdrop via using Jupiter, then you will be on the negative end of that inflation equation, since you can't stake the token to get some kind of steady APY in the traditional sense. Like you usually a stake token, get 20% APY, and you're benefiting from inflation, or at least not suffering from it. The governance model does have token incentives for now. 100 million JUP are being distributed this year, which is pretty damn big. They will be able to keep those incentives for so high for so long. That's a question. That's a question to ask yourself, and it remains to be seen if they can. Thus, much of the long-term value for JUP stakers participating in governance beyond what the team decides for token incentives will come down to two main things. Launchpad fees, which of course will dry up without a doubt during the bear market because no one's going to be launching new tokens. And the revenue sharing, which has not been confirmed, although hinted at. But again, how much revenue will be shared? When will that all happen? Everything is just a question mark around that. So you don't know. If you're investing based on that, you don't know. Another risk, although much more minor in my opinion, is Jupiter's perpetual exchange. So CoinDesk reported earlier this month that during a time of high network activity, some traders were actually reporting failed trades and wrongly liquidated positions on the exchange. Of course, always a risk of using stuff on chain. It can get pretty messy. Jupiter's founder, Weremeow, responded to this issue and attributed the problems to a surge in demand. At this time, it appears that this was just a one-off unique event, but something to be aware of. Having said that, there might be some real opportunity here also with JUP. Solana is quickly becoming the go-to place for meme coin madness, and Jupiter is benefiting from all that crazy mania. In fact, Solana meme coins are a major theme of the cycle right now. If launchpads can deliver and if they can generate adequate hype, then it has real potential to drive increased interest in JUP. And if they ever turn on that revenue sharing, as has been hinted, then that would be a big potential catalyst for the token. Look, the data speaks for itself when it comes to Jupiter. The volumes have been soaring. It's a major, major, major player on the Solana ecosystem, which is a very hyped this cycle. And it's now neck and neck with Uniswap, which has a significantly higher market cap compared to JUP, with much less use case for the token. And with more catalysts coming and the continued hype around Solana and meme coins and all that kind of stuff, it's easy to understand why Jupiter has attracted so much attention so quickly. Thanks for watching.